Hello and welcome. On this final lecture video for Chapter 3, I'll be talking about the unadjusted trial balance versus the adjusted trial balance, and then how to prepare the financial statements from the adjusted trial balance. So remember the unadjusted trial balance, like what we talked about back in Chapter 2, the trial balance is our list of our accounts and then their balances. And then, of course, the unadjusted trial balance would be the balances before we have done any of the adjusting journal entries that we've talked about in Chapter 3. The adjusted trial balance would be when we update the balances in those accounts after we've done our adjusting journal entries. So, for example, maybe we didn't have any salaries payable in our unadjusted trial balance, but then we do an adjusting journal entry, debit salaries expense, credit salaries payable, and now we have a salaries payable, and we then have to include that in our adjusted trial balance. Okay, so then what we'll do is just like what we talked about back in the prior chapters, we'll prepare our financial statements from our adjusted trial balance. So the first financial statement that we do, like we've talked about before, is to do the income statement. So we have our adjusted trial balance right over here. We have our consulting revenue, our rental revenue, our depreciation, salaries, insurance, rent, supplies, and utilities expenses. And then we pull those over to our income statement. We have our consulting revenue of $78.50, rental revenue of $300, and then we have our operating expenses, depreciation, salaries, insurance, rent, supplies, and utilities. We add up, we get total expenses of $4,365. Subtract that from our total revenue, gives us net income of $3,785. So remember, we have to calculate net income first, which we do from the income statement, before we can do our statement of owner's equity, which is on the next page. Because remember, our statement of owner's equity shows our beginning balance in capital, plus our net income, or minus our net loss, and so in this case is zero balance beginning, plus our net income of $3,785, plus our owner investment of $30,000, which we get from the adjusted trial balance right over here. It says C. Taylor Capital $30,000. So we added $30,000 in owner investment, minus our withdrawals of $200, and we get that, of course, from our adjusted trial balance, $200 right over there. Gives us our ending balance in capital of $33,585. And then we can then use that number to help us do the balance sheet. So remember the balance sheet, we pull in cash, $43.50, which we get from our adjusted trial balance, accounts receivable, $1,800, which we get from our adjusted trial balance. We have supplies of $86.70 from our adjusted trial balance, prepaid insurance of $2,300 from our adjusted trial balance. We have equipment of $26,000, accumulated depreciation, less accumulated depreciation, gives us the book value of $25,625. We add up all those numbers, that gives us total assets of $42,745. Then we have accounts payable on the balance sheet here of $6,200, which we get from our adjusted trial balance. We have our salaries payable of $210, which again we get from our adjusted trial balance. Unearned revenue of $27.50 from our adjusted trial balance gives us total liabilities of $91.60. And then we add the liabilities of $91.60 plus the $33,585, which was our ending balance in capital, gives us our total liabilities plus equity of $42,745, which equals our total assets of $42,745. And then we've prepared our financial statements. There is the statement of cash flows, but we will talk about, which is another financial statement, but we will talk about the statement of cash flows in Accounting 102. Okay? So that ends Chapter 3 lecture notes. Thank you so much. Take care. Bye.